As we head into year's end here, especially with finances, it's important to look at all aspects of things and kind of tidy up things as the year comes to an end. We've put together a show specifically outlining some of these things. First, John and I are going to be talking about year-end tax reduction strategies. Some things you may be able to do before year-end here to potentially lower your tax burden in some circumstances. Then Ray is going to come on and talk about holiday scams. Unfortunately, this time of year, those things rear up, how to spot them and maybe how to avoid some of them. Virgil is then going to be talking about how to prep your finances for the year ahead in 2026. And then rounding out the show this week, Nick is going to join us and talking about lifestyle or a legacy. Some questions people battle all the time in retirement and so much more coming up right here, right now on Retiring Well.
Retiring Well, brought to you by Centennial Wealth Advisory, financial advisors specializing in retirement planning and serving all of Northern Michigan. Retiring Well, helping you plan for a successful and comfortable retirement. Retiring Well, plan to retire well.
Well, we're quickly approaching year end, and it's that time of year before you get into your New Year's resolutions and all of that. And so we want to talk to you primarily about tax reduction tips. As you're approaching the year end, there's a lot of opportunities that you should be taking into consideration for your tax planning purposes. Some that you have to do before year end, or some give you a little bit of room beyond the new year and everything. But let's start it off with some of the basics, Art.
Absolutely, John. I think of, every year we get to this time and people are kind of, in many cases, scrambling, right, to do this. And like John said, some of these things that we have still a little bit of room left before you file your taxes, and others need to happen before year end. Some of the very basic things is retirement plan contributions. If you're still working, actively employed, having income, either through your employer or on your own, you likely have some possibility of making contributions to a pre-tax sort of retirement plan. This is thus reduce your taxable income and potentially save you some money in the long run. Now, again, you have to evaluate for your financial circumstances, if that's beneficial to you and your individual thing, but also, what does that look like long term? Do you want to kick the can down the road? And that's a deeper discussion from that, but something to do as well. The other thing that often people overlook, if it's available to you, is HSA contributions, health savings accounts. One of the greatest accounts out there, triple tax saving, tax deduction going in, grows tax-free, and then tax-free distributions as long as it's used for medical expenses. Again, wonderful, but you have to be able to be having these. You have to be in a qualifying plan and be under 65 years old. And so there's some various factors that could play into making sure you're eligible for that. But if you are, you should be taking advantage of that.
Yeah, and for those of you that are charitably minded and everything, now might be that time to accelerate your charitable giving. What if, one, you want to benefit that nonprofit and everything, but also if you're in a tax situation where, hey, maybe you're going to bump into that next higher tax bracket, then let's take advantage of giving and ultimately try and reduce that taxable income for you. So one of those tools is through qualified charitable distribution. So if you're age 70 and a half, and older, and you have retirement accounts, you have an IRA where maybe you're at the stage now where you're taking those required minimum distributions, but you have the ability to use that IRA and ultimately distribute money from the IRA utilizing this qualified charitable distribution where the money goes directly to the church, charity, etc., and ultimately then doesn't show up as taxable income to you, in a great way to benefit others. Switching gears now a little bit, Art, more talking maybe capital gains, losses, how to utilize those at year end.
Absolutely, that's a great point, John. Thinking of we'll go down tax harvesting, often referred to. So when you have a non-qualified or after-tax account, let's say you have investment losses in that, meaning you bought a stock for a certain price and it's lost money out there. You can sell that and realize a capital loss. Depending upon how long you've owned it for will determine if it's short-term or long-term capital loss, and potentially that could be used to deductions on your tax returns, or to offset a corresponding gain if you had some form of gain in that situation. Again, you bought a stock at a certain price and it rose in value and you sold it for a capital gain. Again, those potentially could be offsetting or help you go that. The other piece of capital gains out there that you may or may not be able to control is selling something at a gain. What if you had a property or something along those lines? You can maybe choose when you want to sell that if you're able wanting to get it into this year sort of situation, or if you want to maybe kick it down the road to a further next year or something like that to realize that gain for you.
Yeah, and one of the things here at Centennial Wealth Advisory is we have a tax team that helps us. So it's not just solely left to the advisors, but we have a team that sits down with our clients year in and year out and walks through their tax situation and evaluates, okay, are there certain opportunities that you should be taking advantage of before you get to year end, and then throughout the year as different taxable events may occur, then you have a resource to count on to help you through that. And that's something that we find is so valuable, is how the investment, the income, and the tax piece really go hand in hand as you're trying to build a successful retirement plan. So it's one of those situations where if you're there thinking through, I don't know if I'm really talking to my advisor about a lot of these topics, and we've only touched the surface, quite honestly, but if you're in that situation and would like some additional feedback, we'd love the opportunity to sit down with you for no cost, no obligation, second opinion.
Choosing the right Medicare plan for you can be a daunting task. We can help you navigate the different parts of Medicare and identify which benefits are important for you to receive. Download our free white paper, Understanding Medicare. Know your options and costs, and be informed. Let us help you make educated decisions that are best for your situation. Simply go to cen-wealth.com, scroll down, and click the link Understanding Medicare. Know your options and costs to receive your free copy of this valuable and informative resource.
What can Retirement Analyzer do for you? Retirement Analyzer is a software tool that can help you prepare today for your financial future. You've worked hard to save for your retirement, but as you near your retirement, you may have concerns. Have I positioned my retirement savings wisely? Have I saved enough for retirement, and will my savings last throughout my lifetime? What impact could inflation have on my future expenses? What if I suffer a long-term illness? Will I have enough money to cover my medical care expenses and still be able to meet my other financial obligations? Could changes in the income tax rates disrupt my retirement strategy? There's no need to be in the dark as you prepare for your retirement. Retirement Analyzer can help you find answers to all these questions and more. The first step is providing us with information on your financial assets, the type and current value of those assets, as well as your sources of income. Then, we work with you to identify your expected expenses in retirement. This will include a discussion of the lifestyle you envision in retirement, travel, a summer residence, whatever you dream your retirement will be. We'll input the information you provide us into the Retirement Analyzer, and in a very short time we'll have reports that show us the percentage of assets currently in high-risk vehicles as well as the percent in lower-risk products. Retirement Analyzer enables us to project your income from year to year in your retirement and see how long your retirement savings may last. As we change the conditions of the report, delaying your retirement date, including costs for long-term care, adjusting the expected tax rate, or adjusting your retirement strategies, we can see how changes in these variables may impact your income in retirement and the longevity of your retirement savings. Let the Retirement Analyzer help you test drive your retirement strategy today, because the time to discover the bumps in the road is not once your trip through retirement has begun. Contact our office today to schedule an appointment for your Retirement Analyzer review.
Every holiday season, my family and I enjoy watching Dr. Seuss's How the Grinch Stole Christmas. And I'm not talking about the recent movie remakes, but the original cartoon from 1966. If you're unfamiliar with the story, the Grinch despises Christmas and wants to take it away from the people of Whoville. Now these days, there are a lot of Grinches in the form of online scammers. In the movie, the Grinch would sneak down chimneys and steal presents and decorations. Scammers, on the other hand, like to sneak into your inbox, text messages, or social media feeds. They are after more than your presents. They're after the money you've worked hard for. But with a few smart and simple moves, you can keep scammers from stealing your holiday cheer. Today, I'm sharing a few common holiday scams, how they work, and what to do if you've been targeted. One type of scam is gift card scams. Gift cards are one of the easiest types of gifts to give at Christmas, but scammers love them because they're quick, anonymous, and hard to trace. Gift card scams work by tricking victims into buying gift cards, usually under the false sense of urgency by receiving a phony email or text from someone you know, like a boss or even a family member. This just happened recently to my mother-in-law. She received an email from the pastor of her church in Florida asking her to buy gift cards for him to give to women battling cancer because he was too busy to do it. The message came from his actual email address. Now, my mother-in-law thought this seemed strange and thankfully reached out to him before doing anything. It turns out he did not send the message, nor did he realize that his email was compromised by a scammer. If she had proceeded, though, the scammer would have likely asked her to provide the gift card numbers and PINs. At that point, the scammer could drain the funds instantly, as the cards offer an untraceable way to get that money. To keep yourself safe from gift card scams, don't trust an email that's asking you to purchase gift cards, even if it appears to be from someone you know. Always reach out to the person by phone or talk to them in person to verify the request. Another common scam is package delivery scams. It often begins with a text or email from someone claiming to be from common delivery carriers like the United States Postal Service, FedEx, or UPS. The notices typically claim that there is a problem with the delivery, urging you to click the link provided in the text or email. By clicking the link, you could potentially download malware onto your device. Additionally, the scammer might ask you to input personal information as well as financial information in order to continue. If you aren't expecting a package and receive one of these phony messages, it's most likely a scam. Even if you are expecting a package, an official delivery service will never ask you for personal information like your social security number or bank account numbers. Always go directly to the delivery company's website or app to check your order. Don't trust links and messages. And finally, there are charity scams. A lot of you may like to use some of your retirement money to donate to your favorite charities during the holidays. Unfortunately, there are scammers out there that set up fake charities or fundraisers which may sound real, preying on your generosity during the holidays. They may even imitate the name, logo, or website of a legitimate charity, making their fake charity appear real. Fraud can also involve a real charity. In this case, a person with the charity pockets donations for personal use instead of using it for its intended purpose. You may want to think twice about donating to an organization if you receive unsolicited emails or phone calls asking for donations, or if the charity is asking for donations using unusual payment methods like gift cards or wire transfers. If you have any questions, you can always research before you donate by checking the official lists of tax-exempt organizations. If someone pressures you to donate right away, it's a red flag. So what happens if you realize you've been scammed after you've given away some of your personal or bank account information? The first thing to do is contact your bank or credit card company immediately. You can also report the scam at reportfraud.ftc.gov and to local authorities. Make sure to change your passwords if you shared personal details and monitor your credit report for any suspicious activity. Acting quickly is the best way to protect your money and identity. Now, and to keep your finances safe this season, never pay anyone with gift cards unless you're giving them as gifts. Don't give out any personal or bank account information to an organization or person you're unfamiliar with. Don't click suspicious links or attachments. Verify any charity before donating, and remember, if something feels too good or too urgent to be true, it probably is. Now, back to the Grinch. How did the story end? Well, the Grinch's heart grew 3 sizes when he learned the holidays weren't about material possessions. They were about giving and being with those that we care about. And while we can't count on that happening to today's scammers, with a little awareness, we can keep them from spoiling the season so that we can focus on what truly matters.
Centennial Wealth Advisory is expanding, and we are excited to add a new office in Manistee to better serve our growing family of clients. Our new office is located in the historic Briney Building in the center of idyllic downtown Manistee. Whether you are an existing client or would like to meet for the first time for your free, no-obligation initial consultation, we look forward to welcoming you in our new office or at any of our Northern Michigan locations in Traverse City, Gaylord, Petoskey, Cadillac, or Manistee. At Centennial Wealth Advisory, we specialize in retirement planning with a holistic approach that includes income planning, tax planning, investment planning, healthcare planning, and estate planning. We'll never pressure anyone to become a client. We believe in providing quality financial education, as presented in our locally produced weekly financial television program, Retiring Well, currently in its 14th year and airing on all major networks in Northern Michigan. Whether you're in the Manistee area or anywhere in Northern Michigan, we'd love to hear from you. Living life isn't always easy. It puts up challenges and obstacles you'll have to overcome. There are responsibilities. You put in effort to provide and take care of your family, and to save and invest, to balance work and life. Planning is the first step to succeeding. Plan to retire well.
As 2025 winds down, it's the perfect time to take a quick look under the hood of your finances. Before the year slips away, a few small steps this fall can make a big difference in keeping your income steady, your taxes low, and your savings healthy in 2026. Today I'll share a quick checklist. It's really 5 simple things every retiree should do before the new year. Step 1 is to review your retirement income and withdrawals. Start with your income. Look at what you've withdrawn from your IRAs or 401ks this year. And remember, if you're 73 or older, make sure you've taken your required minimum distributions. The IRS penalty for missing it is steep. If you don't need all of your RMDs for living expenses, you can consider directing it to a qualified charitable distribution or a QCD, which can count towards your RMD but doesn't increase your taxable income. We'd be happy to explain that more to you if you have questions on that. It's a smart way to reduce taxes and also help support a cause that you care about. Step 2 is to check your tax picture. So let's next look at taxes. Many retirees are surprised to learn that their Social Security benefits can be taxable. And it's really depending on your total income. So it's a good time to estimate your total 2025 tax bracket and see if you can trim your taxable income. Maybe you can withdraw a delay until January. Maybe you can convert a small part of your traditional IRA to a Roth IRA where rates are still relatively low. So think of this as just tuning up your tax strategy before the year ends. Step 3 is you can review your investments and your cash flow. So markets have had their ups and downs this year. You don't need me to tell you that, you've experienced it yourself. But you can take a moment to rebalance your portfolios. Many retirees, their portfolio drifts into being either too stock heavy on one side of things, or maybe it becomes too conservative. So a good rule of thumb when you're looking at your portfolio is maybe keep 1 to 2 years of living expenses in cash or short-term bonds or near liquid type investments. The reason is that way you're not forced to sell some of your investments during a downturn in the stock market. Obviously, you don't want to have to tap into those stock holdings when the market takes a dip. So it's nice if you have short-term bonds or near liquid, like I said, cash or other investments available to you so you don't have to sell those stock positions if the market is down. And then make sure your monthly cash flow still fits your lifestyle, including any new medical or travel expenses you expect for 2026. Step 4 is to review your insurance and health coverage. So open enrollment season is here. May not be super exciting, but it's a perfect reminder to check your Medicare plan and supplemental health insurances. Also, it's a nice time to think about and review your long-term care coverage or any home and auto insurance for any potential needed updates. Insurance is not necessarily the most exciting thing, but it is a key part of protecting your retirement income. And then on step 5, we want to organize and simplify. So finally, it's take an hour to get organized. Update your beneficiaries on your retirement accounts and life insurance. When's the last time you went through all your retirement accounts and life insurance accounts and checked the beneficiaries, made sure they're up to date, make sure they're accurate, make sure that the people you want to be your beneficiaries and that their information is correct. Make sure your estate documents, your wills, trust, any power of attorneys reflect your current wishes. Sometimes things change and we need to update those. And if you haven't already, create a simple financial roadmap for your spouse or family. This is to keep, key accounts, passwords, any financial advisor you may have all in one place so that when something happens to you, it's very easy for them and streamlined to go through the process of what to do, next steps, and who to contact. Prepping your finances for 2026 doesn't have to be complicated. Just remember these 5 steps. Review your income, check your taxes, rebalance your investments, update your insurance, and get organized with steps if something were to happen to you. By doing that before December 31st, you'll start the new year with confidence, knowing your money's working for you and not against you. We'd be happy to help you have a financially smooth 2026. If you've been watching our show for a long time or this is your first time viewing, today, make sure that you take a chance to reach out to us. Simply follow the instructions on the screen or contact one of our 5 offices located across northern Michigan so we can help you enjoy your retirement years.
When you have confidence in your retirement future, you can live the life you've always imagined. Because of planning, you now have time to reflect on the wonderful memories of your life. You and your spouse finally have the luxury of leisure time together. To spend fun times with your grandkids, sharing the joy of their excitement about life. Smiling at the thought of quality time with your children and of picking up the check. At last, you have time to breathe and rekindle the love of your life. Why? Because you imagined what could be. You planned for retirement. So today, you own your future.
Choosing the right Medicare plan for you can be a daunting task. We can help you navigate the different parts of Medicare and identify which benefits are important for you to receive. Download our free white paper, Understanding Medicare. Know your options and costs, and be informed. Let us help you make educated decisions that are best for your situation. Simply go to cen-wealth.com, scroll down, and click the link, Understanding Medicare. Know your options and costs, to receive your free copy of this valuable and informative resource.
When it comes to retirement, what comes to mind first? Is it, the freedom that you're going to have, all that free time, the fact that you won't have to set that alarm clock, won't have to bother with that morning commute or, clock in at work every morning? Or what about, all the hobbies that you kind of, weren't able to enjoy while you were working and now you're going to have so much time to enjoy those hobbies? Or maybe it's travel, so forth, right? That would fall under the lifestyle in retirement. Now, what about legacy? A lot of people, they don't really think too much about the legacy side because they're more focused on the lifestyle side. And that's really what I want to talk with you about today. Is what I've seen is, a lot of times it's lifestyle or legacy when we're talking about designing that retirement plan. And what it really should be is both lifestyle and legacy, not an either or. Okay, so starting with lifestyle, this is, making sure that your retirement plan is designed in a way that is going to meet your lifestyle goals in retirement. And this is what most people focus on. In fact, I'll never forget this client. I think he was out of the Petoskey office, but his one-liner was just so memorable. He said, I want to bounce the last check to the bank when I die. Meaning he wants to spend all his money and then die, right? Now that's something that for my job, that's going to be very, very hard to do, right? I mean, we don't know when we're going to die. But the point is here, for him, it was all about lifestyle, okay? He didn't care about the legacy piece. And reason was, he's a single guy, he didn't have any kids and so forth, and he didn't care what happened to his money when he passed. So he was all about lifestyle. And so we designed a plan for him where, you know, he wanted to purchase a place down in Arizona for the winters where he could golf every day. And then up here in northern Michigan, he had some property that he inherited in the UP. And so he wanted to enjoy hunting, fishing, and you know, the great outdoors of the Upper Peninsula. And so that was his plan, right? He was going to, you know, enjoy his retirement by focusing solely on the lifestyle. And, you know, from time to time, what I've seen is many clients, they're kind of in that same boat where they're more concerned about, you know, the day-to-day in retirement and meeting those needs. And they think, well, you know what, my legacy plan is, well, the kids or grandkids are just going to get whatever's left over, you know, when I pass, right? And they don't really plan for that. So, you know, the legacy piece, I'd encourage you to have a plan for that as well. And it doesn't have to be, hey, this is what they're going to get when I pass. You know, I have a client in the Gaylord office where part of his legacy is volunteering at, you know, a local food bank in Gaylord. And so he does that every single week. He gives us his time and his money to that food pantry, and he leaves a legacy that way. I also have other clients where, you know, instead of giving them a whole bunch of money when they pass away, they're taking their kids and their grandkids and they're going on vacations, whether it's, you know, Disney World is a popular one. And, you know, they really seem to enjoy that because they're leaving a living legacy, right? They get to give that gift while they're still alive, and they get to see the joy on those kids' faces and grandkids' faces. And that's something where, you know, what I've come to find out working many years in this industry is if you retire without a purpose, you often lose that enjoyment in retirement. Okay, so part of retiring with a purpose is having a plan for both, you know, the lifestyle that you want to live in retirement, but also the legacy that you want to leave both while you're still retired and living and on this planet, and also after you pass away. So, you know, by all means, yes, plan for that lifestyle. Enjoy, you know, the 30 to 40 years of work that you've had, the savings that you've had, and enjoy that in retirement. But don't forget to plan for that legacy as well. And here at Centennial Wealth Advisory, we'd be more than happy to help. So schedule a free, no obligation consultation. The number's right on the screen here. We'd love to help you both plan for the lifestyle you want to have in retirement and the legacy you want to leave while retired and after you pass away as well.